Give this another things off. So obviously going into a big week next week. No mystery here. We're going into a U.S. election with all kinds of consequences. So I've been living a long time. I've been living in this country a long time, and I've never seen such polarization, such divisiveness. Very sad. It's almost like the art of compromise, the ability to kind of walk over to the other side, kind of empathize, see another way of looking at things. That is all disappearing. If you kind of broach the other side or try and reach some compromising, then you're actually betraying your side of the thing. So we've got this intensive tribalism. I think this is going on certainly around the world. A lot of populism in Europe. And, it's unfortunate because, the world needs serious leadership right now. And of course, we have this, new spike, more cases today or yesterday in the US than when we started in March. I think 90,000 cases a day now in the US. So first off, I hope you guys are safe in your respective locations around the world. But it looks like, some of the experts were predicting the combination of influenza and COVID could go into a dark winter. And so we're seeing lockdowns in France now and quasi lockdowns in Italy. And we've had a huge lockdown in Victoria, Australia, where Melbourne is. They're just emerging from that. So, difficult stuff. But that being said, we've got to kind of park all of that, at the door, not let, whatever our respective political affiliations or beliefs bleed over. And sometimes that's harder to do than not. Sometimes, we want the market to go and do something because it also plays to a different a script that you're playing out in your head for the way, you're looking for the world to shape out. And so that is very often something that, is difficult to, untangle. And that's why we've got to be completely objective. So, I'm going to look at the major asset categories and some other, foreign currency pairs. The major asset categories being the dollar, the metals, and the stock market, because, I think, there's just going to be huge consequences to whatever happens on Tuesday. And I'm not sure that it may end Tuesday night. I think a couple of Supreme Courts in Pennsylvania and North Carolina said that they would allow ballots to be counted after the election. So, if it's kind of close, who knows if we're going to get a result or an outcome. And then if we do get an outcome, I don't know if, one or the other candidates is going to yield. I think that we've got the potential for a lot of volatility and explosiveness. I'll kind of go back to a period, in 2016 where I was trading gold. I remember it very well, just to kind of give you an indication of the potential volatility. And so I think it's going to be, kind of hard. You might just have to kind of stand back, let things sort themselves out, because even if we have a handle, I always say the patterns precede the direction. But even if we think we have something, there's likely to be such a volatility, so many head fakes. There may be, some dried up, of liquidity that, you probably don't want to have positions, going into Tuesday night into Wednesday and maybe even following that. So, what I like to do is kind of take a look at things that, from a global perspective, and then whatever the market does, I can anticipate and make some moves within the context, of that. So, the US dollar, in my mind, it peaked along a long-term trend line, a downtrend line on a 43-year chart in the dollar index. Maybe I should just, bring that up. I mean, we've looked at it, but this is kind of an older chart. I think I banged it down anyways. All right. So, And then more recently, I've been looking at this topping motion, what appears to be a head and shoulders price pattern. Head and shoulders, just what it sounds like. That would be the left shoulder, the peak would be the head, and now you have this head and shoulders. It's not to say that, perhaps we don't come in here before we, do some of that. So not altogether clear as to, how this thing's going to play out. We're, playing along this trend line, and it looks like for now the dollar, frankly, is strengthening. Now we've got a bit of strength. I'm going to unpack it one currency over another. And so, I'm looking at a conflict of, what I feel is a, bearish price pattern here, but also looking at the fact that, prices seem to have grabbed a foothold right here, kind of along this trend line. So we have this, what I call a key reversal. And for those of you who are unfamiliar with my terminology, key reversal is kind of just observing. In this case, the market, the US dollar index, made a new low and then closed at the high. And again, I should clarify, the US dollar index is an index that correlates or tracks the US dollar against a half a dozen of the major currency pairs. This is a weekly chart, which means that each one of these price bars is 1 week in time. And so we kind of had a key reversal here. It's kind of held prices in check. And now, it's anything could kind of happen. And I'm just kind of still getting a feeling based on looking at the Australian dollar and some other currencies that there's some remaining strength, left in the US dollar. So, we could still have some legs to the upside here. We make a move back up into this area. Maybe we even make another major move up to here in a rush to safety before, it craps out again. So there's, a lot of different possibilities. And this is exactly what I do. I kind of game out different things in my mind based on certain patterns. And again, you'll also notice that notwithstanding the fact that, when the market picks a direction it goes, you can see that there are entire periods of time where the market just, kind of gestates in one phase. So I'm not so sure that, we come here and we don't, do this before, something like that. So I don't know. I'm just feeling like there's some incremental strength. With all this uncertainty, people usually go into cash, and when they do, they go into the dollar. And that could certainly drive a early move next week. And so now I'm going to kind of look at each one of these dollar pairs to see what's going on. And this is the euro versus the US dollar. And, I think I've been saying for a long time that, I expected another retest of this 115 price level. And it looks like we're going to get that again. So for the euro versus the US dollar, we've been in this kind of multi-year, long-term, 10-year downtrend. We've had peaks and valleys, but, this is, still a bear market until proven otherwise. Now, a couple of weeks ago, similar to the US dollar index, we had these two reversals. So sometimes the markets just point where they want to go, but it takes a while, so this happened several weeks ago, and it's taken all of this kind of back and forth to then, kind of go in the direction of those reversals. So to me, again, I'm fighting a couple things where I can, make the case that we made this inverted head and shoulders with this neckline here. But consistent with the way markets usually work is that they usually retest major breakout areas. And when we kind of come to gold, that's kind of my thesis with gold. We broke above 1,750 in gold, and, it feels like we're going to retest that too. So, to my mind, I've been saying for the last couple of weeks that I just felt that it was in the cards that, we were going to retest this breakout area about 115, 114, and then I don't know if we go back into the primary downtrend, of the euro, or we kind of find a way to, start going in the other direction. So it's an open question, but I think going into next week, it looks like we have this, dollar uh, firmness going on. So you have this double top in the gold on the weekly, and then crack through 116. I think is going to open a path lower. For how long, not quite sure. But I do feel that we're going to get some dollar strength going into next week. And again, that's kind of usually consistent with uncertainty, where just like the pandemic, at the height of the pandemic, um, investors rushed right into the dollar. And so with kind of all the uncertainty that's likely to ensue next week and maybe even through the end of the year, this may even have to go to the Supreme Court like it did in 2000. So, I'm not going to rule anything out at this time. But, again, you got to leave all of that noise at the doorstep and just look at what's going on objectively. And again, I think we've got just some headwinds in some of these currency pairs, which suggests that, we're going to get some strength next week in the dollar. So we've been kind of going on this 10-year downtrend in the British pound versus the US dollar. And, I said a long time ago, I just think it's going to get messy in here. I think you're just going to see all kinds of stuff, which either resolves itself in the direction of the trend or we eventually break out. But I think there's going to be kind of a lot of noise, maybe through the end of the year in these dollar pairs. So, the 135 has been major resistance area in the British pound. And you can see we've got a collection of these inside bars. So for the past 1, 2, 3, 4, 5, 6, 7 weeks, price action has been contained within the range, basically, of that, range 8 weeks ago. So to my mind, what these coils, suggest is that they're a building of energy. It's like, that beach ball effect where you hold a beach ball under the water and then you lift your hand off. What happens? It just uncorks. And so this is what's happening. We're building energy. And this is going to uncork one way or another. With the catalyst of the election next week, we're going to see some, just huge mammoth, types of trades. So, you could, get these head fakes where, pops up one way, it goes the other, and certainly perhaps even the other way too. So I think it's going to be pretty dicey, and the ranges are going to be, vast. The liquidity may dry up. So, putting a stop in, the market could, have 50 pip bid offers at one point, Tuesday night. So tread carefully if you intend to at all. But again, it just feels like the path of least resistance in pound, is, somewhat lower. We've kind of had this uptrend line that has been containing it. We're just a breath away from, just peaking below here again, and it could open up another move back to 120, or not, So again, I think we're going to see a lot of things going into next week. Now, I've openly kind of theorized that, perhaps we put in a major bottom in this pound in the form of this even atom double bottom. Again, the onus is going to be, the first thing is to try and get through this 135. This would start really, to my mind, if we could, retest that, it would start opening up a move higher. So to my mind, the dollar looks like it's going to go lower long term. And so, next week's price action could open up, an opportunity. But it's going to be wild and woolly. Now, the Australian dollar is starting to look a little clearer to me. I mean, the Australian dollar is starting to break down, and looks like it's, kind of poised for another move lower. I mean, again, I cannot see it taking out the pandemic lows. So, I think a bottom has been put in, but may take many, many months to, sort that out. Again, just like euro, British pound, we've had a 10-year downtrend in Aussie dollar. This is the Australian dollar versus the US dollar. It's a weekly chart. And again, we've, made a huge sprint off the bottom, and it kind of looks like, this is kind of losing power. After it made a peak here, it's kind of had lower highs, and, looks like it, wants to make another retest, perhaps at 66, even it up. I've been looking at a potential inverted head and shoulders here, and, maybe we have the other shoulder forming down by the 66 area again, or not. This could just go back into the primary downtrend that it was, and kind of keep just going lower. But to my mind, I can't see that low getting taken out. So we are going to have opportunities going forward. I just don't know how it's going to play out. New Zealand dollar looked like it was forming inverted head and shoulders, kind of going backwards this week, forming some kind of small key reversal. So again, something to keep an eye on next week. We have this emerging inverted head and shoulders with the neckline, which is simply a line drawn through the entirety of the pattern. So if we were to, kind of go back to the 68, that could be a threshold where this thing turns higher. But I don't know. I just get the feeling that the dollar feels like it wants to strengthen, and that we're going to get kind of another incursion lower. We have kind of a mini trend line here that's been holding this thing in check. And so I feel like we may have one more thing, before we retest this thing and, go the other way. So, yeah, I just feel that on balance, nothing that I really want to put a strong bet on. I wouldn't play anything until, into next week, unless you had a very strong bet. Now, dollar yen, I saved kind of the best for last in my mind. It's either a great opportunity or just a grand trap. Because, and I should have put this even on a longer term chart. This is somewhat, trading on a, long-term symmetrical triangle. And you can see that we're starting to get to what I call the business end. The closer you are to, the end of this thing, that's when you're going to get an opportunity one way or another. Now, for the long time, I've been theorizing this is going to break to the downside because there's just a litany of bear price patterns, going all the way back to 2015, the double top, the head and shoulders. And then in the more recent time frame, we can look at this through a prism of a symmetrical triangle, which, I'll back off and take a look at that in a minute. But to my mind, this has been, a multi-year kind of descending triangle. And we see the appearance of these descending triangles in a number of markets right now. Gold is in a descending triangle. They're just at various forms of maturity. Now, to my mind, the dollar yen is at a very mature point of this descending triangle. What I mean by mature is that, we'll see in gold has had, one or two and maybe 2.5 touches within this descending triangle, where dollar yen has had 7 touches of this 104. And, as I've kind of, maintained is that, I try and game structures. So I'm trying to see how this is a trap, how I'm looking at this so bearish, but because it's getting so compressed, maybe it's just, building an energy for, kind of something that's just going to go the other way. And, I try and game it out and try and see the other side. But, as I've kind of said, to my mind, when a market bottoms, when a market takes off in one direction or another, it usually comes from a place, a base where it either, has a double bottom, maybe a triple bottom, and then it goes. It has, higher lows and higher highs, and it keeps going. A market doesn't give you, 7 opportunities, to get in. And we saw that even in silver. Silver had this descending thing, and then it looked like it was going up here, again, it looked like there was a bull run. And I was saying, I just can't buy into this thing. And then in the pandemic, it went from 19, made a new low, and then it took off. Again, I can't, think of this as a bottom. Something has to happen where, we have a shakeout and maybe we do something like that. But this thing looks like it, needs to get banged through this 104 area, retest this 100 area. And this is where it could get tricky because it does look bearish here, but, it could be a bit of a trap, because whenever you kind of get under these levels and then you kind of run into, where there's been some prior history, this is where you could get the stage where you get one of these and it does one of these. So, again, it's open season next week. And I think you're going to see everything. It's going to look like a kid with a crayon. But I just feel that, again, all of these patterns, and sometimes I'm overthinking it. So that's the head and shoulders bear pattern. This is the descending wedge. Recently, you've had this head and shoulder, double top. Then you had something called an H top. We draw these weekly bars, and the way it looks, it looks like an H. And then it also looks like what's called a horn or a steer top, because if you look at this pattern, and I can't draw it well, but it just looks like the horns of a steer. And if you look it up, it's actually called that. It's called a horn top or a steer top because it looks like the horns of a steer. So you've got every bear pattern that's, under the sun inherent in this thing. And then it's just a question of how is this thing going to play out? Do we get one of these and bang back up to the resistance line? But I do feel that this is going to be the trajectory. How it gets there, is, an open question. How long it takes, what the price action is. I certainly, would look for any kind of rally, up into, this area as a great opportunity. Now, obviously, all bets are off if, we come through here and now we start, coming out and breaking out the other side. So, and this is, by the way, what I do all day long. I put boundaries, I put structures. Sometimes it's just a go to the bank where, a year ago in April 2019, I saw this double top right at the top of this ascending trend line. And, I kind of, was seeing what was going on here. I was kind of onto this thing that, it was just kind of a thing of lower highs. So when we came back over here, to me, I was just chomping at the bit. So, if I'm looking to short something, I'm always looking for the kind of what I call the elastic band, where, you kind of have a pullback, you have a pullback and then a release in the direction that I'm looking for it to go. This is kind of the opposite, where you've kind of been dribbling lower and maybe you need an elastic band to, to send it down again. So I don't know if that is kind of makes sense to you guys. Sometimes I can't explain things very elegantly, but when I saw this double top right at the apex of this triangle, this is what I look for. This is when it's just kind of no-brainer stuff to me. And, there were kind of an inside bar, a key reversal here. I got short here and rode it all the way down here. And so this is kind of what I'm looking for in my trades. It doesn't always happen, but frankly, all I need is 2 or 3 of these a year. And that's really what, I'm looking for. So it's going to get tricky here. I mean, I'm short. I'm, looking for this thing to go lower, but, you could have one of these elastic band things where it does one of these. So I don't have high confidence of what's going to happen here. And, I would probably just say, don't play, into early next week. I would wait for things to kind of show their cards and then look for the price action following that. So I do think so. It's probably worth it to just step back and look at the dollar yen from a long-term monthly chart. Let me just see if I can get some more history here. So you can see that this is the monthly chart, and it's kind of forming this long-term descending wedge also. So you kind of have, this this thing of this long-term downtrend, and even in the last couple of years, so you saw that on the weekly chart. So we saw the double top on the weekly and the head and shoulders. That's where this is back in 2015. And then you can see it's just been kind of a descending triangle. Although, again, a little bit, hasn't quite, gotten, touched down to, the lower part of it. So it's kind of more of like a symmetrical triangle. And we saw this on the gold chart. And so you're kind of getting into, again, whatever's going to happen, it's going to happen, and this is a monthly chart. So again, it could take a couple months to flesh this thing out. But you're kind of getting within the narrow part of this symmetrical triangle where it's either going to continue higher or, go lower. So, plenty to watch out for here. It just feels like the heaviness, the weight of all of the prices is such that there's very little chance that it can rally. So you've got all of that weight, so to my mind, it has to go lower, even if it's going to go higher. It has to kind of do a flush out before it does that. But to my mind, I look at the historical charts, there's just no way. This just feels like this is just going to keep going lower. So, I've been pretty consistent with dollar yen. I would look for kind of any rally because I don't see, when I try and, look for something that can, rally off something. So even when we kind of, had this huge downtrend, over here, where the market just came off, I kind of always look for something, okay, where, is there something that, now it could end, and you have the key reversal here, you have kind of this triple bottom right here. Once it kind of cleared through that neckline of that triple bottom, then it had a foundation to launch off. There's no foundation here. There's nothing, there's no, if you're going to build a building on this thing, it needs a platform, it needs a base, it needs a launching pad. And so, to my mind, the launching pad is to launch this thing lower. The foundation I see is actually the, just this sawtooth descending wedge that is just grinding this thing lower. And to my mind, there's nothing in place. So I always try and see where am I going to be, caught or found out. And so look, there is this, very substantial kind of funky area here. So once we get here, maybe we do something like that. But to my mind, it's got to go back and re-explore that area 400 or 500 pips lower before we find out if there's any basis that this thing's going to, turn around. And to my mind, that, kind of goes for all of the yen pairs. They all look lower. So here's a monthly euro yen. Yeah, we had a nice little fun rally recently. I kind of said that I really doubt it would be sustained. And you can see we came up from 127 and we're now 122. But this is, it's going to be difficult in here. There's just a lot of grind going on in here. And so probably likely that we're going to come back to this 117 area and keep, popping up here. But it still feels like this wants to go lower, the euro yen. And on the weekly, it's pretty consistent even a couple of weeks ago when we had this large rally, I just couldn't make the case for it sustaining. And you can see this week we're now rolling over. So whenever I try and, open up a chart, I kind of, try and assess what is the phase or the direction of the market. So generally I just open. So this one is a little bit difficult because you open it up and your mind kind of just sees this kind of thing. And it's like, you say, well, it's kind of in the middle. It's kind of done nothing. But in a way, it has kind of, not in a way, it has, ground lower. This isn't a downtrend coming from 150 or 122 over the last couple of years. And then, from my mind, I kind of look within the noise and try and see, okay, what is the governing price pattern? So we have the head and shoulders there, we have the double top here, and effectively all we really did was, rally back to the neckline of that double top. We retested, the breakout area here. We broke out of down here. We retested it, and now it's going back in the direction from whence it came. And so, to me, the path of least resistance in dollar yen is lower. I would use any rally to sell this thing. So you kind of have an emerging double top here. You kind of cratered this week through the neckline, and looks like you're going to close a hair under the neckline, kind of confirming that the next direction is lower. But, again, next week, I'm hoping to, maybe get some kind of pop where it kind of gets a little fake out, comes back in here, and then gives you another chance to short it again around 124. But to my mind, these yen pairs look lower. Same with pound yen. If you get my accelerator program, you should be short pound yen right around this current area as we kind of dove through recent. So again, the driving pattern, just like dollar yen, has been this long-term double top, head and shoulders that took place 5 years ago. And this to me is, validation of why I look at longer term charts. You cannot see this on a 15-minute chart. And this is what I call a governing price pattern, because it, governs or dictates, price behavior, following those bear price patterns. And in fits and starts, that's what we've seen, even over the last several years, where we formed this rounding top, with these kind of lower highs. I mean, it's kind of a stealth thing. I kind of thought, well, maybe we would have one more, peak up here, but it would still be a lower high. But I think nonetheless, even if it does rally, I think ultimately the trajectory of this thing, is lower and then likely to kind of take out the all-time lows, of the last couple of years. I just, we had this flurry, this trap in the pandemic, in the height of it, but it doesn't look like it's, gaining any more traction. And now it looks like it's kind of rolling over here. Kind of get this head and shoulders, and then anything below, call it 132, will start opening up another wave lower. So, we've been hanging on very tentatively to this uptrend line, which, I think was just kind of an arbitrary. And you can see that, we're about to punch through, the recent support of the last couple of weeks. Now, what I was looking at going into last week was, this kind of collection where you had like 3 weeks of just inside bars, where it just stalled out. This rally, which I thought may have legs to go to 140, just stalled out. And then I just, said, put a sell stop right under these lows and let the market do the work for you. So I don't know, again, going into next week, I don't know if you want to have positions. I don't know. I would, be inclined to keep a small position in this. Although, again, everything could get very hairy. So, judge your risk accordingly. But I think that, the path of least resistance looks like it's back in the direction of this trend. And once again, I try and game these things out. I try and play devil's advocate. And at one point I said, okay, let me be open to the fact that this is a double bottom. But if this is a double bottom, then, it should act like a bottom and have, higher highs and higher lows, not just kind of stall out and then start dribbling lower. So that's my thought for the yen. Has been for a long time. The yen looks like it's going to get stronger. And I think as, the climate probably gets more risk averse, we'll look at stocks in a minute. I think the yen is going to go stronger. While we're in the pound pairs, let me just kind of look at pound New Zealand, pound Australian. Kind of been hard trades recently. I think it still looks like these stealth bull trends, quiet bull market is intact. So, it's been, pretty crummy to try and trade pound New Zealand in the last 4 or 5 weeks. It's just been bouncing in these 500 pip ranges. But, I think, since kind of finding this double bottom, along this ascending trend line, it's still intact. And even this week, we're looking like we're making a small little, reversal. They look benign, but, there was no follow through. We had a reversal last week. And if this was really good, an indicative, then we should have seen, some follow-on price action. Instead, we made a little low and now we're kind of turning back. So, this little mini bar, could be a catalyst for something. And, I'd be inclined to put a buy stop above that bar, with a sell stop below there. That's your risk and, that's your reward. And I wouldn't be surprised to see that outcome at all. Pound versus Australian, even stronger. So you can see, with all the hubbub, we're, on new weekly highs for the last several weeks in pound Australian, despite the fact that there's been extraordinary volatility. And this is kind of the nice thing about looking at things on a weekly chart, because, this thing has been banging both sides of a 500 pip trading range. And yet on the weekly, it's just been stealthily doing its business. Again, to my mind, the dominant, and I always look for what, a preceding pattern that is going to govern or dictate price action. And to my mind, this triple bottom right here has been kind of dictating price action, where since it broke above that 170 neckline, it has been incrementally going higher, and probably, next week could be a catalyst for going much higher. And again, I said it, back at 175, that was likely going to be the low of this trade. And I'm kind of sticking to that story. So you can see we're right knocking at the door of the neckline again. Again, this is why all key reversals are not created equal. So last week when we had this key reversal, sorry about that. To me, I always look at a reversal in context with what is preceding it, the trend, the pattern. So to me, the trend and the price pattern indicated this thing was going to go higher. But last week we had this reversal where made a new high and closed on the low of the week. Now those can look pretty scary. They're pretty crummy when you're in them and you give back, 300 pips of profit. But this is why, my methodology and my approach is kind of to stay in things a little bit longer term, because the market does this stuff. And now you've got this inside week bar where you can see that the range of this week from low to high is within the range of last week. So to me, this is kind of a coil. It's a building of energy. It's a storing of energy. And then what I do is I look at, prior governing patterns and direction to kind of determine where that, energy is going to, unleash. And, I think it's going to unleash that way. So again, when we look at pandemics and we look at elections and it looks all crazy, But to my mind, these catalysts, they just send prices in the direction that they were going to go based on the underlying pattern. We'll see that in the NASDAQ, where in the depth of the pandemic, the NASDAQ came and hit a point along a trend line that was just perfect. So it's just amazing how the market is able to do this. So look at maybe Australian Canadian. It still kind of looks like it's going to roll over a little bit. Yeah, I think we're going to get into some weakness next week in these. Now the New Zealand dollar Canadian, I don't know. It's something that I'd probably just leave alone. It's kind of had this false breakout to the below this. So this is the New Zealand dollar versus Canadian dollar. And for a long time, I was looking at that double top, these complex head and shoulders, and theorizing that this thing had to go lower. And then when it broke this neckline, you think, well, okay, the heaviness of that pattern should send it lower. And you can see that this, again, was the pandemic, the bottom of it, and it was just turned out to be a trap where you got a hair lower, and then it went back into this trend. Now that could be just the pause that refreshes in this downtrend, or we could be setting up for what I call a busted pattern, where the implications of this pattern no longer apply. Not quite sure what's going on here. It's kind of an open question. We've kind of got this symmetrical triangle going on, and I just wouldn't touch this thing right now. I think, we're at a resistance area. My instincts tell me that this feels like it's going to, kind of go lower again. That maybe out of this triangle, it should go lower. But I don't have a good feeling one way or another, and it's just a lot of noise right now. So I certainly wouldn't, of all the pairs, look at anything like this right now. So let me just move on to silver and gold. So this is the long-term chart of XAG USD. That's a ticker symbol for spot silver. It's been a lot of fun, a lot of noise in silver race recently, but kind of an open question of what's going on here. So this is kind of what I was talking about, where to me the guiding pattern in silver was this long-term descending wedge. And then you kind of had another descending wedge, which I always kind of trust one layered upon the other. So you had, one descending wedge, and then you had the second one, and, it just kind of looked kind of funky to me. But, all along here, I think consistent with, what we were saying in the dollar yen, is that a market doesn't just, so you had 1, 2, 3, 4, 5, 6, 7 touches at $14. So, when this kind of looked like a double bottom here, and then it started rallying, I was thinking to myself, is this a double bottom? Is this going to rally? And then I said, look, markets don't touch a certain thing 7 times, if they're good. They don't give you 7 chances to get in. And you can see that, it laid the basis for then taking out that low. I always felt that $14 low, the way it held, that was just too elegant. And then you can see that the market had a stage where it took out that low and then, set the table for something else. And so, recently, started looking at this as a kind of an inverted head and shoulders, and suggested to you guys a long time ago in July to start buying this thing around the mid $18 level. And then, had a take profit right here, about 25.87, and took out this much out of the market. And then, I kind of left it alone. And after that, I've been kind of theorizing that this is going to go back into a bear market, and that we're likely to retest this breakout area about $19 or $20. Even when it was up here. there were just certain aspects of this market that looked like it was getting out of control, meaning that, we had this tremendous volatility expansion. You can see how quiet, these bars are. What I mean quiet is that these are the weekly ranges from high to low. So very controlled, 30-cent week, 50-cent week. Then all of a sudden we start getting $5 in a week, which represents the 40%, the price of silver in a week. And then you have 3 of those in a week. And typically when I see 3 increments of volatility like this, I just say, I'm willing to hand it over to the next person. So I got out right here. I didn't get out at the top. I watch it go even higher, but I kind of said, that just looks like it's playing with fire. And then, more recently, we've been observing silver within this symmetrical triangle. It retested the breakout area of that triangle, and then now has kind of gone back down again. And now we look like we have this kind of double top, if you will. And, if we take out this just under $22 area again, wow, I just think we're going to plummet again. So very counterintuitive. Everybody's playing gold for safety because of central bank spending, because of this or that. And that's why you cannot let, this noise get in your head. Because markets, as you can see, everybody's been chasing the upside of gold and silver. I guarantee you 3-to-1 articles have been, bullish, making the case for, $3,000 gold. JP Morgan has said $3,000 gold, on and on and on. And in the meantime, to me, the market has been telling another story. And I think we're going back to, the breakout area on 19, $20 in silver. What happens then, I don't know. But, kind of same thing with gold, where gold kind of got out of control in this time frame, where you had these 3 bars of expansion of volatility after a very quiet kind of lead up to that. And now it's not as clear on the weekly. Let me draw that a little bit better. You kind of have this symmetrical triangle. And to my mind, markets usually retest breakout areas. So you can see there was a breakout area. There was, a lot of congestion, right around this area, 17 to 1750. And to my mind, markets break out of these things, they retest them, and then, if they're good, they go again. But I kind of always felt that, we had to revisit that 1750. Suggested short trade this week, and then yesterday I suggested you take profits, because we're kind of banging within both sides of this descending triangle, and just like dollar yen, it could take some time. These things can bang a lot longer. So every time I think something's right, then it kind of gives you another goose back, where you might get one of these, it looks like it's good, and then it kind of goes back in here. And so you could get one of these, but we are getting closer to more of the mature end, what I call it, of the descending wedge, where, next week, and again, I'll show you the 2016 timeframe, you could get maybe a poke out of here, just a bull trap, and then it does something like that. But I think by virtue of the descending nature of this thing, where after making a new high, you just had this, just can't, it just peters out. So now we've had these, 3 touches along this support line around 1850. And again, you could have a little rally, but this is kind of what I feel is going to be the price of gold. So, if you get a, kind of a fake out. And this is exactly, it's funny. I was looking at a descending wedge triangle in November of 2016. This is, and I'll show you. And what happened in that time frame is that you kind of had kind of a dipsy doodle there, and then it kind of came and peaked at the thing. Then with the 2016, it peaked out of here, and then it was just a fake out. But again, what I was looking at was this kind of trading pattern in 2016. So pretty ironic. 4 years ago, we had the same thing. So let me kind of, again, put into perspective what next week, could look like. I'm just going to try and find that time frame. Actually, I was probably looking at it on the daily. On the weeklies. Here, it's right here. So I probably should look at it on the weekly first. Let me just kind of see what this looks like, and then I'll kind of pop back to the weekly. Yeah, so here it was. And then we'll look at it on the weekly, and you'll understand a little bit more about what I was looking at. So this was the right here. This was election night, November 2016. And preceding that, you had this descending triangle, pretty well formed. You had kind of a movement out of it, and then you had this thing, and then you had a peak above that, this bull trap, and then it went back in the direction of the thing. And so this is what I'm trying to highlight. And so this was the thing where it went to what, 1340 and then 1260. So it had an $80 range, when the market was trading at 1300. So I don't know what that is, 5-6% it moved in one night. So, I don't know how many of you guys remember, but in the lead up to that, Hillary Clinton was generally favored in the polls to win. Then, the polls open on, November 2016, and the first 3 hours, it looked like, it was going to, according to what the projections were, that Hillary Clinton was generally looking like she was, going to win the race. And then I remember I'm watching this chart around midnight, and then boom, all hell breaks loose, where this unknown candidate all of a sudden, looks like he's going to take the presidency, and it went, $80 in the other direction. But you can see I wasn't really surprised because, descending wedges are one of my favorite patterns. I look at them and, kind of understand how they work. And so to me, this is just a giant head fake above here. But this was kind of the controlling pattern, these descending highs. So you just had all of these just descending highs. And this was, another one of them, despite the fact that it rallied amazingly. You can see it was just lower highs. And, I kind of made a whole bunch of money doing that. So I think this is a great perspective on what could happen. These kind of head fakes, $80 range in gold. Gold is substantially higher now. So $80 could be $180 on Tuesday. So let me kind of check out the weekly, and preceding that descending wedge, if you will, was a kind of a downtrend. So to me, it wasn't just in a vacuum of that daily chart. This was the weekly chart of gold, and leading into that, you kind of had this big, double top at the 1800. Also had kind of this descending triangle. So this was now on the weekly what I was looking at, what you just saw on the daily. And it doesn't look as, huge, but you can see right here, it kind of just snuck out of the high part of this, trading range. But you can see it was still a case of lower highs. So I was just looking at this wedge, and then you can see this was a great opportunity where it kind of gave you a poke above here. everyone, chased this thing, and then it went the other way. So again, I think this is an indication of what could happen, what is likely to happen on Tuesday, or I don't know, going into next month. So it just feels like we have a descending wedge going on in gold and in silver, and that prices look like we're going to have another thrust lower. But again, we could go, $80 higher before we turn around and go $150 lower. So Wilson says, yeah, the limit order was spot on. So I did something this week with my gold traders and my elite traders that I don't usually do. I don't usually, suggest putting limit orders because of their limitations, no pun intended. But what had happened prior to my order going out a couple of days ago, so 2 days ago, I suggested getting short gold at 1882 on a limit. And you can see that day it went to 1884, caught me. And then last night I said, just close it out at, 1867 and bank, 150 pips. And I just want to explain. So typically I like to do things where I catch the momentum. So if I see a key reversal, I like to put a sell stop, and frankly hope that the market opens higher and then catches me, and then I get put into a trade. That elastic band effect. So I very rarely will do a limit order. But what I saw was this huge breakdown here, and the fact that we were going to probably likely re-challenge this. So I just tested it out. But the problem with a limit order, and it was right there, and I was very lucky because I basically caught the high of the day. And it was just luck. I just, approximated that we'd get a bit of a snapback into this trend because of the size of the bar, and then it would go lower. So I had to do two things. I had to approximate how much it was going to snap back, and then was it going to go lower? So in that case, ended up getting, lucky. But, I don't usually do limit orders because, it could snap back just to below where my limit is and then go down. Or, if I'm triggered, then I have no idea how far, it's going to go the other way. So I rarely do limit orders. But Wilson, a couple of days ago, I suggested selling it at 1882, get out last night at 1867, and we banked a few dollars on that. And then I suggested getting out just because, I see this thing trading within this and I figured, maybe it would get a little lower. I didn't want to risk it, but given kind of how choppy and volatile it is, I just thought, well, maybe it could come back down in here. But I just thought better safe than sorry, get out. And you can see that it snapped back, and, we could kind of come back here and do one of these. So I do feel like these things starting to look bearish, but it's going to be difficult to catch going into next week. So let me just kind of finish up with stocks, which I think is going to be the next big story. It looks like we just have, the beginnings of a classic double top. This is the NASDAQ, and, you don't have to look at anything more than this. This just looks like an M top that's emerging that I think, again, we've had a parabolic up move in stocks. And I think, I don't know, I'm guessing the party's over. And it could be over in a big way. So I've been kind of watching things trade within this ascending, broadening formation. Now, what I want you to notice, again, I talked about how these elections or, outlier events cause markets to where they were already, looking to go on the chart. And what I'm, pointing out here is you can see how perfectly we touched these 3 points. And then it looked like, well, now it was just going to depart and go its other way. But it came back and touched exactly on this line, during some outlier thing that nobody could predict. And yet the market came back to where, it was indicating here and fulfilled its objective. So now the question is, where do we go from here? So now this ascending, broadening price pattern is actually a bear price pattern. We saw this in pound versus Australian dollar a few months ago at 205 pound Australian. And I said that pound Australian was going to go to 178, which was the beginning of the triangle. So that could be the destination for stocks. Pretty outlandish call right now, but you could see stocks cut by 70%. Hard to think about, because what's been buttressing this market is the Federal Reserve standing behind with all kinds of ammunition to support the market whenever it hiccup. But now we're at 0% interest rates, and I don't think that the Fed has a lot of bullets left. And so it's not even a useful discussion. I just want to look at what's going on here. And here's the double top on the weekly that we see on the daily, and that's the neckline, which we're not too far away. And if that kind of confirms it, I think I, might have one more bounce. And then if we kind of go back in here, then it could be a lot of trouble. And my feeling is the good times are over. You've had this parabolic up move that just made no sense. It was only based on Federal Reserve stimulus that has sent this thing higher. So I think we're looking at the beginning of the end for, this bull market. Now, S&P and NASDAQ have broken above their prior highs in, January, but we'll see the Dow Jones did not. So we have a reverse symmetrical triangle, or what is also called a megaphone top. Megaphone top, because this looks like a kind of a megaphone that a coach would kind of scream at through a sideline on a college football game. And then you can see right at the apex of this megaphone top, this ominous looking double top. So actually one of these megaphone tops appeared in 1929 before one of the greatest crashes in market history. Just saying, I don't know if this is going to be the case, but that's what we're looking at. Please give me one moment. So, picture's worth 1,000 words. So, it's kind of anticipated that Biden could take the presidency and maybe even the Senate, and all kinds of spending and whatnot. So who knows? Or the market has just run its course. So I don't look for reasons. The reasons why are, to sound intelligent at a cocktail party. This is just, that's a picture says it all. And, I was saying last week that I was theorizing that we were at a double top. And then I said, I want to see how prices behave. And you can see that prices are misbehaving. The prices are behaving, indicating that was the top that I was looking at. And so, yeah, I think that this is, looking pretty bad. So the Dow Jones is starting to get smoked worse than all of the other indexes. It actually never achieved the new high. So while the S&P and the NASDAQ, you can see that we never made a new high over that January high. And it too, just like the S&P, has got this reverse symmetrical triangle or megaphone top. And it's just amazing how it can take 8 months to go up, and you can see, 2 months for it to go down. So gravity does work. And again, you can see that, we've now kind of formed this double top. So, do we kind of come back here, form this head and shoulders, and then go back down? So it looks pretty ominous there. Wilson says, will I be trading on election day itself, or will I trade? So I'm always going to wait for opportunities within the context of how I look at things. So yeah, I mean, if I got a giant rally in gold, above that neckline, around 1910 or something like that, I'd be inclined to step in there and short gold. I'm really looking at putting a large amount of assets on the short side of the stock market here. I was hoping that it wouldn't come off as quickly, but the market is anticipatory. And, we're right at the top end here, and, the signs are all there. There was this key reversal. So, sometimes the markets tell us where they want to go, but it takes a little longer for it to happen. So, this key reversal right here made a new high, closed at the low. This is telling us 1, 2, 3, 4, 5, 6, 7, 8 weeks ago, right at this high, that was it. So sometimes it points, and then it just takes a little while longer for it to get going. So we can look at some other stock markets. Duncan says the FTSE's not looking so good either. So that was already looking bearish. I was saying this is a rounding top many weeks ago. Somebody asked my thoughts here, and to me, this looks like a huge double top, kind of head and shoulders up here. We kind of cracked through this neckline, and as prices would do, it retreated right to the breakout area. And now we've kind of got this rounding top, like the pound versus the yen. And so, to my mind, we're going to retest the lows and go lower. So, yeah, I think the party is over. All right, so let me read some of the elite questions. I think we had quite a few, so let me just kind of get to some of them. These are people on my daily email list. Neil says, my question is, I find the Dow difficult to trade both short and long term. What is the best practice in trading the Dow besides, hanging on? So to me, like any other trade, the bigger the pattern, the more decisive the price action, the better it allows you to get into a trade and understand that trade. So to me, I have my saying, know the cards that you're holding. And so, like I said, I think it's going to be very, very, very volatile, especially the stock market. This is where everybody has their money. But, so this is the monthly too. This just looks horrible, just horrible. So, the problem is, Neil, is that we have a 3,000 point trading range this month. So, you can see this pattern, this reverse symmetrical triangle pattern on the monthly too. And you can also see this emerging double top. So I don't think you're going to see the highs very soon, 29,000, but you're at 26,000. So, Now, if you get in here, you've got to be, prepared for one of these. So, anything can happen. The size of this bar, my hopes would be, maybe we get some kind of rally into this bar, which to me would be just a dead cat bounce and just, something that I would look to short. So, this is also commensurate with my thesis on gold, where you can see how orderly, everything, the lead up to this was. And then you can see in the recent years that the volatility has just gotten out of control. And to me, volatility suggests uncertainty and change in direction. So you can see how we had those extraordinary volatile months leading up to the high in silver and gold, and then they both crapped out from there. But look what's happened here. You just had this parabolic, and this feels like just the last trade before it all comes down. It's hard to say it when you're seeing it at the time, but this looks pretty bad. This looks really bad. So how do you play it? I mean, again, you've got just enormous volatility. So if you're going to put a 50-point stop, you can see how difficult that's going to be to catch it. So the first thing is to start with a thesis based on what you're looking at in the market. Is there a driving pattern? And right now the patterns are kind of emerging to the point where I can start theorizing. But you also have the price action where you look at made a new high, close on the low, made a new high, close on the low, made a new high, close on the low. So you can see I look at both what's going on when I think that there's an emerging pattern, and then I also look at the price action at the juncture of the pattern. And so, this is starting to feel like it's over. How to play it? Look, I can't tell you that you're not going to get another 2,000 pip rise before you get one of these. But I would look for, any kind of rallies, I think, to get short. It's not going to be easy. Roy says, I'm currently holding two positions, Australian dollar, Canadian long, and euro yen short. Both are coming into nice profit. Would like to know I spoke about euro yen. I think it's going to go lower. Australian dollar, Canadian dollar kind of feels like it's leaking here. And, I would be inclined to take profits if you have them. Yeah, I think Australian dollar, Canadian dollar looks like it's leaking. It's got this double top and this emerging reversal. So, yeah, I would get out of Australian dollar, Canadian long, Roy. Hamish says, recently there's been a lot of focus on dollar weakness, especially with COVID lockdowns and lack of help with stimulus hasn't been helping, as we know, China. So I've been looking at the dollar Chinese renminbi and the possibility of selling this currency. I was wondering what your thoughts on the risks were. Because it's such a low volatility, manipulated currency, Hamish, I don't want to spend a whole lot of time, looking at it. I do think that there's going to be incremental dollar strength going into next week. The DAX, Augusto wants to know about. So it's been oscillating between 13,360 and 1230, creating a resistance level. Would it be too early to short? So again, I think it looks like we're going into a lockdown again, and these stock markets look like it's going to be probably over. You can see we've kind of got the reverse symmetrical, the double top here, and some very nasty price action this week. So I said last week, I want to see what price looks like following these double tops, and price is starting to tell you that it's starting to come apart. So we kind of had this bearish double top head and shoulders here, and then we had one more thing to the same level, and now that looks over. In what form or fashion it's going to come down, quickly or not quickly, it looks like it's coming down. Christian says, what would it mean if the gold and stock market would go a mile to the downside during the election. So I think we talked about that, Christian, gold and the stock market. So Emilio, yes. So in the last couple of weeks, I've been, looking at being bullish pound Australian dollar, pound versus the Australian dollar, and bearish on pound versus Japanese yen. So Amelia says, wouldn't it make sense just to short the Australian dollar versus the Japanese yen? What am I missing? I recall you saying that we must treat each case separately. So that's basically it. I kind of, yes, look at those correlations, look at that kind of thinking, Emilio, but ultimately I just kind of defer to, what's going on in the price action at the time. So, to me, pound Australian, almost back to the weekly highs, and the pound yen on the weekly lows. So I thought about that, being pulled in two directions, with the same base pair. But that's what the charts are telling me. So that's what I do. And, believe me, I thought about that, and, it creates a bit of an internal conflict, but that's, why you have to just dispense with it and look at the price action. So Ian says, I hope your family are both staying well during the COVID. He says, I just saw a major letter announcing a change to our banking system. I try to pull up this link, Ian. Let me see if I can do it again. I didn't have a chance to read it before this, so the link didn't load. I'll try one more time. Yeah, that link doesn't load. So I'm sorry, I can't answer that. And then lastly, Naresh wants to know about a stock that's trading on the Hong Kong Exchange and Clearing Company. Also, there's going to be an important IPO next week in Ant Financial. I think all of these IPOs and I think all of these stock splits have been creating to this environment of fervor. And now I think you're seeing the excess, and now I think you're done. So I would not chase, Ant Financial may, price well on the first day. You're likely not going to get any allocation. So I would not chase anything at this time. And, Naresh wanted me to look at something on the Hong Kong exchange. Sure looks like it's, going higher now. So whatever that is, you can see it went higher and now has hit a bit of a hiccup on the, year to date. And on the yearly, looks like it's, fairly extremely overbought. So to me, I don't know. I think stocks are, flashing very dangerous territory here. Very dangerous. So let me know if you have any other questions other than what I've just covered. So are we all good today? Do you have any other questions? Anybody like to chat about anything? Actually, you know what? I didn't put this all the way down. So Carl, palladium is kind of a non-liquid pair that not many people are following. So I'm not going to spend a lot of time looking at exotic markets. Jonathan says, is there going to be a huge cash crash? Shouldn't bonds be skyrocketing? Again, I try not to look at those correlations. Not necessarily. Christian wants to look at oil. So consistent with what I've been saying last couple of weeks, I thought that oil would roll at that $45 area, and that's basically what we're seeing. So to me, it looks like there's just going to be another asset crash, same as we had in March. Only the difference now is there's going to be nothing to save the markets. That's the danger now. That we had the Fed, you had the Congress, you've had $10 trillion worth of stimulus in the United States in this past year. So yeah, they may do one more $3 trillion stimulus bill, but then it's all gone. And then there's nothing to hold this thing up. So for the last 8 years, every time the market, came off, the Fed would lower interest rates. Problem is, there's nowhere to go anymore. Fed, interest rates are at zero. So the Fed always says, yeah, we've got other tricks in our bag and this and that. And yeah, they could throw some other crap. They could, start buying stocks. Federal Reserve could start buying U.S. stocks. I'm not going to be surprised to see anything happen. And then you're going to have the final crash. Once that happens, it's all over. So I think we're in very dangerous territory. So for me, you've had a lot of, bear patterns for many years in oil. You had the crash to zero. Things can't go, further than zero. So we've had this dead cat bounce, which has been huge. Again, supported by stimulus and market excess. And now I think you're starting to roll over and probably going to get sub $20 oil again. So it looks like gold, stocks, oil, the same thing that happened in March or the beginning of the pandemic, where everybody threw all of these assets out and rushed into the dollar. It looks like that's happening again. Calvin says, how do we protect our assets? So to me, a crash sounds ominous. To me, but if you're short, you can make a ton of money. I mean, gravity works. You can see how fast things fall. It takes, years and years and years for the market to kind of just go like, just sideways, and then 3 minutes for it to go all the way down. So I don't know. You can get on the other side of it and get short. Calvin says, I'll look into puts. Well, be careful of those. You have to be very careful about your timing. You might be wrong and still get wiped. You might be correct and still get wiped out. So, if the crash happens 2 weeks from now and your puts expire next week, and that's happened to me so many times where I know what's going on. I understand the move, and I don't buy far enough into the future and watch all of my premiums, go to zero, only to see the market go in the direction that, I anticipated. So it's just like anything else in life. It's, if you're going to do it, you have to be careful of timing. So I would buy puts into a rally, Calvin. Gerald says, Gerald, if that's the case, please contact our support team. I'm going to put, if you're having any difficulty accessing your account or some of the products you signed up for, just send a holler over to our support team. I'm going to put the link in the chat box here. Make sure I've spelled it right. So Gerald, please contact our support. Kevin says, thanks as always, Mark. Had a great week this week. Thanks to both of your suggestions as well as several of my own. Your methods have had a fantastic impact on my trading and outlooks on the market so far. So Kevin, that is phenomenal. If you'd be so kind, put a review on our website. Actually, it's an independent website. I don't even control it. You're welcome, Gerald. ATN, thanks again for your insight. Always very helpful. Moreover, don't worry, you're perfectly clear when explaining. So thanks for that, ATN. Mish wants to look at Tesla. I'm going to have to log in quickly to my stock platform real quick. Give me a moment, and I'll check out Tesla. I think it's, I don't know. I think it's all over. So it looks like Tesla is starting to round the corner. I think that's what Trump's saying as far as us on the COVID curve here too, right? And I hate to say stuff like that. I'm politically agnostic these days. I find it both sides don't have a lot to offer. I think that's the problem. So, Tesla, this certainly would be the area. So certainly I would have expected 350 to hold, but if we start coming here, it's just going to look like one of these. And that's kind of what I'm feeling. I'm just feeling a crash. I think Facebook is crashing today. That was the one thing that, I thought could hold. And looks like the double top that was put in a few weeks ago is the indicator. So this is Facebook. And you can see a couple weeks ago, put in a very nifty double top right there. And it's kind of like a funky, head and shoulders. And I would, watch this area. You've kind of got a gap right around here, 225. So you're off just a ton today in Facebook. What it looks like, yeah, that's these charts do not look friendly. You can see we've been hugging this kind of arbitrary trend line since March, and now it's all rolling over. So whether we come straight down or we kind of go into a consolidation, it's just unsustainable the way this thing has been going up week after week, month after month. Certainly in the background of what's been going on, and really it's a handful of companies that hold up the S&P. 20% of the S&P index is 5 companies. So it's a bit of a phantom. Calvin says, I bought Facebook this morning, thought it would bounce back. Yeah, there are times to do that, and there are times not to do that, Calvin. I would not fly in the face of this this market now. So it says same with Apple, even after a good earnings report. So remember, earnings are about last quarter. The market is about what's going to be next quarter and the quarter thereafter and the quarter thereafter. The market is a discounting effect. It doesn't give a hoot about what's happened yesterday. That was yesterday. That was then, and this is now. So this looks a lot like the NASDAQ. It's a complete proxy for the NASDAQ. And you can see we're not too far away from, confirming what looks like a, kind of a nasty reversal in this thing. And, also always boggled my mind is who's going to buy $1,000 iPhone, when they're out of a job. Now I know Apple's morphed to services, and I'm not going to get into all of that, but again, a picture's worth 1,000 words. We're starting to cut through this support line that has been intact since March. And I think there's a question about Amazon, and that's also just, again, these 5 companies have been holding up these indexes. It's really kind of artificial. And if these start to come apart, then, we can expect the markets will follow. So you can see Amazon too. is not too far. So whatever that level is, around 2,800, would start, looking very ugly for stocks. So don't buy into the hype. Nina says, the market sell-off just started. I'm waiting for the market bottom. I won't be trading now. I'm waiting for the election result. So a lot of people do, kind of have that philosophy. To me, there's just so much money being made shorting stocks, shorting markets, because they come off so much faster. It's just a programming that, most of our lives we've been long, and certainly most investors in the stock market are long. They're long the 401ks, they're long mutual funds. Everybody's long. And so it's a bit of a conditioning. Sometimes it's hard to do that. And, to my mind, we could be in for a long bear market if this is what this is starting to look like. So maybe a long time to buy stocks again. Calvin says people are going to try and buy the dips and soon find out that there won't be any. Yeah, so again, for me, and again, I hate wading into these philosophical or intellectual discussions, but what's been driving the stock market, is primarily Federal Reserve stimulus, and what happens when the punch bowl gets taken away. We shall see. So Nina says she's been selling on all the hype since September. So good on you. Let's see. Farron says gold and the NASDAQ have traded mostly in lockstep pattern for the few months until this week. Any thoughts? Things could break apart for a week or two, but they have been kind of tracking. It feels like you're going to get a general asset crash where everyone's just going to, this is what happened in March. Everyone bailed on everything. We're, seeing oil crater. Actually gold, went up, and the market went up just again on this, you did see this cratering back here in gold. So I don't know. I just feels like, we're going to get one more real doozy. So we'll see. There's a key reversal right here at the NASDAQ. That's kind of holding this thing up. So, this whole ride up, you kind of had, you're just going on this parabolic curve. We had all these key reversals, made a new low, closing the high, new low, closing the high, new low, closing the high, new low, closing the high. And then right there, you can see that just took you into that territory where that was kind of waiting for it. So, yeah. So this is, just to kind of get a feeling, this is the same thing that I saw in pound versus Australian dollar several months ago. Now, pound versus Australian dollar stayed contained with this thing, kind of did one of these and then came all the way back down to the breakout. So, this is kind of, you look at charts for references, markets don't always do the same thing. That's why I always defer to the market. But you can see that we had this, it's kind of clearer on the daily, but this is this ascending, broadening price pattern. And then within that, you saw the double top. This, the NASDAQ is kind of snuck above there a little bit. So, but it looks like a bear trap, but whatever. So we had this double top right there. And right at that time at 205, I was theorizing that, if this was what I was looking at, that we'd come all the way to the beginning of the pattern. And I said, 175 to 178. And, that's where it went to. So this is kind of what we're looking at right now in the NASDAQ. As just a bit of a perspective, the NASDAQ, snuck a bit out of the high here and has now kind of got a double top just above this trend line. So, you know, if we start coming to here, then we're coming to there. All right. Is that covering everything? Everybody good? Anybody have any last thoughts or questions? Again, please put your, you know, comments below. I'd really like to know, you know, if you got any value or input out of this session. If you feel like it, you can also post it on our review website. Also, you know, always like to know what you guys think and, you know, if this is helping you. Jonathan says, very interesting. Nina says, 9 of my last 10 trades were profitable trades. That's awesome. Wilson says, thank you so much for your guidance. It was a great session as usual. Gareth says, thanks very much. All right. So guys, thank you.